Good evening, brothers and guests. We welcome you to the next portion of our undergraduate social distancing week, which is our financial preparedness Zoom seminar. We appreciate your time and coming out and taking a little bit of time out your day to be with us on this evening. This session will be led by our Second Vice District Representative, Brother Robert Albery. We appreciate his leadership, appreciate him taking out the time. And this is something that we have come up with as Undergraduate Leadership Council and with talks with our Grand Keeper of Finance, Brother Daniel Jones, and it's really important for not only undergraduates, but brothers in the Black community in general to be financially prepared for any situation. So I'll introduce Brother Albery, and the next voice you'll hear will be him. Brother Robert Albery was born in Nassau, Bahamas, and spent his childhood in Miami, Florida. Following his return to Nassau, he became interested in accounting and finance while attending St. Augustine College High School. Following high school, he attended the University of the Bahamas and graduated a Bachelor of Business Administration and Accounting. He's a charter member of the Alpha Epsilon Beta chapter at the University of the Bahamas and a previous chapter bossless. He's a current second vice district representative of the 13th district of Omega Psi Phi Fraternity Incorporated. In this role, he represents all undergraduate brothers located outside the United States of America. He has previously worked as a junior accountant at a Lightborn trading company. He is currently working at Baker Tilly as a full-time auditor, preparing for CPA examinations. His future goals are to become a CPA and assist small businesses with their accounting and reaching their financial goals. Ladies and gentlemen, brothers, the next voice you will hear will be from our 13th District, Second Vice District Representative, Brother Robert N. Albery. We hope you enjoy.
Good evening, brothers and sisters. It is great to meet with you. I will be presenting to you tonight on financial preparedness. So, as we begin, I would like to speak on the topics at hand that would be focusing on Accounting 101, budgeting tips, and also the wealthy mindset. One moment. All right. As we begin the presentation on financial preparedness, facilitated by myself, Brother Robert Albery. And just to start you off with a quote, "The secret of getting ahead is getting started," by Mark Twain. Now, with Accounting 101, the American Institute of Certified Public Accountants, AICPA, defines accounting as the art of recording, classifying, and summarizing in a significant manner and in terms of money and transactions and events which are, in part, at least of financial character and interpreting the results thereof. So, in aspects of our lives, we must hold accounting accountable for everything that we do. Everything that involves money, transactions, and events in financial terms, we must take that within. As we know, we live in a world of money. And accounting is often referred to as the language of business and communicating financial information to different users for decision making. Now, why is accounting important to you? It helps owners, managers, investors, and other stakeholders in the business evaluate the financial performance of the business. It provides vital information about the earnings, the profit and loss, and liabilities and assets for decision making, and it identifies, measures, and communicates economic information just for you. Now, there are main objectives of accounting, which we must hold accountable in our lives and also within our small businesses. We have to record transactions, and we have to be able to, and that is the primary role of accounting, which is to maintain a systematic, accurate, and complete record of all the financial transactions that happen within our business. And of course, we can't go wrong without budgeting and planning, whereas we're able to plan ahead by anticipating the needs and resources within our business. Decision making, of course, whereas we were able to, in a business, we were able to include the price to be charged for products and services, the resources needed to make these products and services, and the financing and business opportunities available to us. And of course, we need to look at the business performance through the usage of financial reports, which are a very reliable source for measuring the key performance indicators, so that business owners and yourself will be able to compare themselves against their past performance as well as against their competitors. Additionally, we have financial position, whereas you'll be able to generate at the end of the accounting period and reflect the financial condition of our business. Liquidity, whereas small businesses sometimes go through failure due to the fact of mismanagement of cash. But with accounting, we are able to determine the liquidity of a business, which refers to cash and other liquid resources at your disposal to pay off any financial commitments and liabilities. We also have financing, which will allow business owners to prepare historic financial reports and also have projections as well, and the control by placing various checks across the organization and to be able to avoid any types of loss of theft, fraud, errors, damage, obsolescence, and also mismanagement. Now, poor financial management is one of the primary reasons for you living in debt and struggling for you and your small business, especially in the first year of business, of course. So to avoid poor financial management, we need to keep a track record of our cash flow. By preventing your personal financing and business cash flow from running dry, you should implement policies for efficient record keeping and a sound financial strategy. And you need to be able to detect and avoid frauds and theft by customers, employees, and suppliers. And you'll be able to, as a entrepreneur or employ staff, the key to growing your small business is to review your financial statements regularly and establish a detailed budget that will allow you to discover operational inefficiencies. So this will be able to assist you in avoiding any type of poor financial management. Now, there are 5 basic types of accounts as we deal with accounting, which are assets, which is the cash and resources owned by the business and yourself, the liabilities, which are the obligations and debts owed by the business, revenues or income, which is the money earned by the business through sales, expenses or expenditures, which is the cash that flows out of the business to pay for some of the items and the service, such as salaries and utilities, and the equity, which is the value remaining after liabilities are subtracted from assets, representing the owner's held interest within the business. Now, this is how, for you and your personal or business accounts, this is how you'll be able to set it up. You can set it up through the usage of the spreadsheet software, example using Excel. You can use desktop accounting bookkeeping software through usage of QuickBooks Desktop. And we have cloud-based bookkeeping software with QuickBooks Online and Wave. Now, my advice to you is that with the spreadsheet software, this is the cheapest option. Google Sheets doesn't cost a monthly fee, but trying to create your own GL and a spreadsheet program can spiral quickly into a disaster. And then we have another set of advice I have available to you is the desktop bookkeeping software usually requires a high upfront fee, but the software is then yours to keep. With online cloud-based bookkeeping software, you have to pay a monthly fee to keep your online subscription, but it's a much lower cost than that of the desktop software. Now, we'll keep it simple, but the most common financial reports that we have available to you for accounting is the balance sheet, which will be able to summarize your business's assets, liabilities, and equity. We have the profit and loss statement, also known as the income statement, which will allow you to break down the business revenues, costs, and expenses. And we have the cash flow statement, which is similar to the profit and loss statement, but it doesn't include any non-cash items such as depreciation of your motor vehicle, your household, and building, and what's not. We have and then it's focusing on the earning and spending money and its immediate viability and ability to pay its bill. Now, we have some pro tips for you available to you for your accounting, for your personal and your business financial lifestyles. Stick to a schedule. At least once a week, record all financial transactions, including incoming invoices, bill payments, sales, and purchases. Make sure to tap your books when your mind is fresh and engaged. Start at the end of the day before you open your books rather than late at night when you're about to close up shop. Keep proper records. Proper record keeping for small businesses and yourself makes the process easy and keeps you compliant with the law. And to make it easier for you, now, we all share in the brotherly love, so of course we have our Brother's Keeper available to you. If you need help finding quality accounting partners, you can look forward to accountants, certified public accountants, CPAs, bookkeepers, and tax preparer planners available to you. And I'll also be able to assist you in any of your financial needs as well. Now, going on towards budgeting tips. The distance between your dreams and reality is called action, known by unknown. When it all boils down to it, a budget is basically just a plan for your money. Budgeting means that you are spending with purpose before the period begins. A budget does not limit your freedom, it gives you freedom. It is really all about being intentional with where your money is going. Now, from going forward, we'll be speaking about budgeting tips for your daily life. Budget to zero before the month begins. This is also called zero-based budget. You'll be able to make a plan and give every dollar that you have a name. You'll be able to focus on your income minusing all of your expenses, and therefore it will equal to zero. And of course, if you are married or in a relationship, sit down once a month and have a family budgeting night. Therefore, you'll be able to do your budgeting together. You need to get on the same page with your money, so set goals together and dream about what the future will look like. But if you're single, as previously mentioned, we also have financial persons who will be available to you, such as the accountants, the CPAs, the tax preparers, and also the bookkeepers who will be able to hold accountable and help you reach your financial goals. Now, with the budgeting tip, also with every month, you must know that every month is different. Some months you'll have to budget for things like back to school supplies or routine car maintenance, and other months you have to focus on vacations, birthdays, and holidays. This is your personal budgeting, so you'll be able to develop that on your own, and also with your financial partner if you have that available to you. Regardless of the occasion, make sure you prepare for these expenses in your budget, and don't let these special occasions sneak up on you, of course, such as for Christmas, homecoming, or Valentine's Day for your QRAD. Be sure to adjust your budget every month as times change. Man, make a savings fund you can stash cash in throughout the year. Now, we must start with the most important categories first, which is your necessities. Giving and sharing are at the top of your list, and then comes for the four walls: food, shelter, and utilities, basic clothing, and transportation. Once your true necessities are taken care of, you can fill in the rest of the categories in your budget. And here's a big one: pay off your debt. If you have debt, paying it off needs to be a top priority. Don't be afraid to trim the budget. If things are tight right now, you can save money quickly by canceling your cable, your dining out less, and shopping at discount clothing and grocery stores. Remember, your budget cuts are only temporary. Now, make a schedule and stick to it. While you're making a budget, part of your monthly routine, why not pick specific dates for other expenses? Set up auto payments out of your bank account to pay bills and buy your groceries on a set date every week or twice a month. When you know what to expect and when to expect it, you take a lot of stress and potential pitfalls out of the picture. Track your progress. It is important to check your progress from time to time. If you are married, track your spending and purchases together so you both keep your goals in sight. And don't forget to celebrate the small wins as well. Moreover, create a buffer in your budget. Put a small amount of money aside for unexpected expenses throughout the month. Label this as miscellaneous category in your budget. That way, when something comes up, you'll be able to cover it without taking away money you've already put somewhere else. So it's basically known as a emergency fund. Use cash for certain budget categories that trip you up. If you are constantly overspending on your grocery budget or being out money, cash out those categories and use the envelope system to hold you accountable. Just go to the bank, pull out the cash amount you have budgeted for that category. Once the cash runs out, stop spending. Only focus once you go over budget. Once you are even closely being over your budget, stop spending. Try an online budget tool. If pen and paper or spreadsheets on Excel are not your thing, you can use a budgeting tool online known as Every Dollar. You can focus on planning a budget and tracking your spending from the comfort of your smartphone. And you'll be able to sync it up with your spouse or accountable partner as well. Be content and quit the comparisons. As we are men, we tend to have competition amongst ourselves. We see other men striving and going forth, so therefore we want to be able to compete and, of course, be above them. Not in a negative way, but everywhere we go is competition. So don't compare your situation to anyone else's. Comparison will not only rob you of your joy, but also your paycheck. Keep moving forward and doing what is right for you and your family. Have goals. Whether you're paying off loans, building up your emergency fund, or miscellaneous category, or paying off your mortgage, you need to focus on your why. What are the reasons you are making these sacrifices? Give yourself lots of grace. It usually takes 3 to 4 months to get a handle on this whole budgeting thing. It won't be perfect the first time or the second, but you will get there. So it's easy to get in there, but it gets a little harder as you maintain it, and slowly the process will become easier as the months go by. But guess what? With the budgeting plans and tips that are available to you, this is the takeaway. Whether you take on your personal finances and accounting for yourself and your family or get help from an expert, understanding the basics will help you better manage your finances. You will save time chasing receipts, protect yourself from costly errors, and gain valuable insights in your potential. And available to you, we actually have an example of a personal money budget plan that will be provided to you. We have an Excel document which will have the months available from January to December, of course, on a yearly basis. And you'll be able to track over your income, your home expenses, your transportation, your daily living, your entertainment, your savings, and a wide variety of other assets and liabilities that you may have on hand. So therefore, you'll be able to increase your savings and keep a track record on a monthly basis of what you're going through on a yearly basis. And therefore, you'll be able to take in the small wins, and sooner or later, as your savings keep increasing, you will soon be a millionaire. Now, this is the wealthy mindset category that we are on now. Why people stay broke. Make sure you avoid these same mistakes seen here. They ignore their debt. They don't stick to a budget. They lack an emergency fund. They don't pay themselves first. They spend more than they earn. They buy liabilities and not assets. They don't invest in themselves, and they put today's happiness before their financial future. And these are the reasons why people always stay broke. So therefore, we have the wealthy mindsets. W, write down your goals. E, envision obtaining them. A, affirm your desires. L, learn through self-education. T, take action and transform. H, hold on to your vision. Y, and know that you're in control. There are 4 rules to wealth. 1, don't trade your time for money. 2, buy assets before liabilities. 3, get multiple streams of income, which we're going to get to in a minute. 4, never stop spending. My bad. Stop spending, never stop learning. We're borrowing money wrong, especially in the bank system. The wealthy, they borrow money, buy assets, and the assets pay for their liabilities. But some other persons tend to borrow money, buy liabilities, need more money. Now, for millionaires, on average, they have 5 to 7 streams of income, in which I'm going to share to you. We have earned income from trading time and from money, such as your daily work. For myself, as I work at Baker Tilly Gomez, I'm trading in my time for that money because I'm getting paid on an hourly basis. Therefore, at some point in time, I'm working towards it, of course, I need to be able to obtain more streams of income for myself, so be able to build up my savings and be able to take care of my family and myself. Next, we have the profit income from buying low and selling high. We have the interest income from lending money out. Oh, before I get to that. So the profit income, with the income from buying low and selling high, therefore, you'll be able to purchase wholesale items or products for yourself, and basically you'll be your own salesperson, your own market person, and you'll therefore sell them at a higher price. For the interest income from lending money out. In my opinion, it's never good to mix money and friendships. So I feel as though as you are building up your customer base, lending money out, such as for yourself becoming your own bank, you should add interest towards it. You should add 10% towards it. Let's say, for example, if you lend someone $10, you say you add 10% towards it, you get back $11. You gained $1 for yourself, and that's just one person. Imagine 100 persons, imagine 200 persons. So therefore, the interest would therefore increase. Now you have your dividend income, which is the income from owning shares of the company, which is kind of simple to explain. Rental income, income from renting out property, invest in real estate, and invest in, you could even look forward to doing Airbnbs. Get Airbnbs out there and get persons to get involved. Whoever want a vacation up to the spots. I know in the Bahamas, everyone's always coming to Bahamas. So with the Airbnbs, that's always available to you. So you can live by the beachside and enjoy the moment while the money is actually coming in from you renting out your own property. We have the capital gains, income from assets increasing in value. And we have your royalties, income from others using your own idea and your product. You have multiple expenses, so why not have multiple incomes? Now, how wealthy people spend money? The wealthy, they earn money, invest in stocks, stocks buy dream car. Earn money, invest in real estate buys dream house. Earn money, invest in businesses. Businesses pays for your lifestyle. But on average, we earn money, we spend almost all of it, and we stay broke. Now, which one makes more sense? Now, how to have more money? There's essentially more ways, only two ways to have more money. Decrease your expenses, increase your income. By decreasing your expenses, you need to spend less. You need to be able to find tax breaks. You need to eat out less. You need to cut unnecessary subscriptions and services and compare different insurance providers. To increase your income, as we spoke about previously with the multiple streams of income, get a second job, start a side hustle, push for a promotion, fill out paid surveys, invest in dividend-paying stocks, become a freelancer, and start an online business. Now, do you want financially freedom? Do you want to be financially freedom? Have financial freedom? Then do this. Save 50% of your income. Start a business. Practice a high income skill. Invest in stocks, invest in real estate, and have some side hustles. 6 best ways to gain your knowledge through the usage of increasing your streams of income and decreasing your expenses. Learn from books. Get a mentor. Listen to podcasts. Learn from online courses. Watch seminars. And you can also watch videos on YouTube. And the 7 best investments for yourself is the stock market, real estate, your health, your career, your side hustle, your knowledge, and paying off your debt. Now, of course, we need to be able to pass on our essence. We need to be able to look up towards the next generation in our lives, so our lifestyles. So let's teach our kids to know their wealth, not what someone else tells them. How to create multiple passive streams of income. The difference between investments and risk. How to build and maintain excellent credit. How to set and achieve big goals. The importance of ownership, what assets and liabilities are, and how to build generational wealth. Any questions? So, an example of, so to say, a liability. A liability could be in the means of looking towards more of your expenses and also your payables as well. So we have salaries payable, we have utilities payable. You just going forth and having to decrease basically your assets. Any type of purchasing that you owe to another business is your liability. So if you owe any type of funds or assets to another company, that would be considered your liabilities. If we may have any more questions, as an undergraduate, also from the audience, as an undergraduate, how can I start saving and making streams of income now? Okay, so as we spoke about previously about the streams of income, I'll go back to that. Now, you are just coming out of college and university, so therefore, you could be able to start from, of course, attaining your primary job. You'll be able to trade in your time for money and therefore let your job increase your funds. And remember, I stated on a weekly basis, from once you're getting paid on an hourly basis, you need to be able to set up 50%, or at least close to up to 50% of your money in savings. From your savings, therefore, we'll use that towards your investments. Therefore, you'll be able to buy low and sell high if you decide to get products for yourself. Let's say, for example, if you decide to purchase beard oils for $4 and you want to sell it for $10, for every beard oil that you sell, you gain $6 in profit. And that income will keep flowing. And therefore, at some point in time, you'll be able to get some interest income, and therefore lend your money out and you'll be able to get interest on it. Then you'll be able to buy some shares and some stocks for yourself. And sooner or later, when your money builds up so much, you'll be able to get your own rental company. And this was the streams of income. This is what builds millionaires. So as an undergraduate, you're taking one step at a time. Get your job, get your side hustle. And therefore, you'll be able to lend out money, you'll be able to get the dividends, and you'll be able to go on from there just by increasing your payload. So from there, start by getting your primary job and just get your side hustle, and everything will flow much easier once you stick to your budget plan. How would you go about saving 50% of your income? For myself, that's what the budgeting plan and budgeting tips is for. You need to be on your budgets. You need to take care of all of your expenses first. Basically, that'll be your light bill, that'll be your car bill, that'll be your car payments, or that'll be any other expenses, any other personal expenses that are not necessities, that are not major necessities in your life. Take care of those first, because you will also have your miscellaneous and your emergency fund as well. Keep some money on side for that. But if your emergency fund was not touched or not spent, that also goes back into your savings as well. But with the 50% of your income, it all depends on your budget plan, and you just got to follow the tips. Once you know how much money and income that you're gaining for yourself, you'll be able to now see how much you're able to save. Now you can save up to 50%. I didn't say you don't have to save 50% of your income, but you can save up. As time goes by and the money starts flowing, everything will become easier. If we may have any other more questions from the audience. So another question arises: as an undergraduate chapter, what do you recommend for brothers to follow in order to sustain cash flow? So for undergraduate chapters, we need to be held accountable for all of the functions, initiatives that we held out throughout the year. So that would be basically the fundraisers. It could be for the car washes. Basically, budgeting, you need to realize that as an undergraduate chapter, this is also a business. It's a friendly business, and we are a nonprofit organization, so it's a business. Every business has budget plans set out for them. So all you gotta do is know your income, your expenses, and you'll be able to see what you need to purchase for this next initiative, what items you need, and you need to separate now, because now you need to be able to donate some money towards a great cause. And then from there, once you have your budget plan set up, once you have your bank statements, and once you know your bank expenses that you'll have to pay on a monthly basis, therefore you'll be able to keep a record of how your money in the chapter is being situated, and therefore you'll be able to view the cash flow. And like I mentioned before, we do have financial reports and records known as the balance sheet, the profit and loss statement, also known as the income statement, and the cash flow statement. So once you're able to focus on your Excel document or using QuickBooks, I recommend QuickBooks for all undergraduate chapters. It's a small monthly fee, but some persons are actually able to find a code on YouTube that'll actually be able to give you free access and be able to hold it off for yourself as well. I know you'll be able to keep sustain your cash flow from there as well. Another question raised: would it be beneficial for each upcoming line to create an LLC, a limited liability company, if persons don't know? I believe it will create revenue for the line and keep brothers active. What do you think? I believe that could work. Now, I don't think that it should work for every line. I think it should just go for the chapter. I don't think that a line specifically needs to create an LLC. Or you could it could be basically dependent on the amount of persons that's on that line as well. So therefore, you'll be able to come up with your equity, and the money. Basically, equity could also mean the startup money for your company as well. So persons will be able to put all their money together for an LLC, and they'll be able to go forth with their business, which I have no problem with. So I believe it depends on the amount of money that you're able to start up with. And like I said before, I would not focus on I would not focus so much on the banks, or he's not getting a huge sum as a loan, because of course you need to build up credit for yourself. But I wouldn't focus on building up a huge loan for yourself in the bank, whereas at some point in time you'll end up in debt, or you won't be able to pay the bank fees or the amount of money that you have to pay towards bank loans. So I would recommend you could create an LLC, but you just need to be able to get your budget together, get your money, see how much money that each member or each line member has, be able to contribute, and you gotta realize everything has to be shared. So one cannot be more than the other, because that would create complications in the future. Let's say, for example, my line brother donates $50 towards the LLC, and I only donate $25. At some point in time, I need to be able to find that $50, or he needs to at least only contribute $25. So therefore, everything stays equal, and the love is there. Because, like I said before, do not mix friendship and money. It's a difficult thing to do. Some businesses make it and thrive off it, but it's very hard. It's very hard to mix friendship and money. If we have any other questions from the audience. All right. So as we have no more questions from the audience, I thank you for your questions and your time, and we now have a few virtual gift cards to give away to you. Let me just go back. Okay, so there you go. Thank you for listening. And now you may DM our Facebook page, and to be able to, with the comments, and to be able to, you'll be able to focus on, you'll be able to see who will be able to be guaranteed a wonderful virtual gift card by us. So the names that we have for the virtual gift card is now being announced now. And first we got Sylvester Hendricks as our first person to receive the virtual gift card. Then we got Charles Blackwell for our second person who will be receiving a virtual gift card to you. And now we got this. We got this now. Sorry if I pronounced his last name incorrectly, but we got Anthony Lafleur. Lafleur. Sounds French. Lafleur. And who else do we have? And lastly, we have Vincent Johnson. So going over the names again, for who will receive a virtual gift card from, of course, the Undergraduate Council of the Omega Psi Phi Fraternity Incorporated, we have Sylvester Hendricks, Charles Blackwell, Anthony Lafleur, and lastly, Vincent Johnson. Congratulations on winning the virtual gift cards and for contributing and listening and tuning in towards financial preparedness. Facilitated by yourself, myself, Brother Robert Aubrey, ACE 18 Alpha Epsilon Beta chapter. Thank you. Really appreciate you, brothers and sisters, if watching too.
Brother Aubrey, you've done an outstanding job, and we appreciate your leadership not only on this financial preparedness seminar, but also from the 13th district as Sega Vice District Representative. You've done an outstanding job these 2 years, and I want to personally thank you for being a friend and a colleague.
Appreciate
just
you.
a few closing remarks before we end the session for this evening. I want to thank all of our viewers. To reiterate what Brother Aubrey said, make sure that the winners for those virtual gift card giveaway supply those emails to the fraternity page so they can validate and send those out to you. Thank you again, Brother Aubrey. To our grand bosses, David Merrill, we thank you for allowing us to have this seminar. To international headquarters and IT team, we appreciate you and your support. And one last shout out to our Grand Keeper of Finance, Brother Daniel Jones. Thank you for the advice, the friendship, and the opportunity for the undergraduates to be able to speak on financial preparedness. We really appreciate you, your leadership, and your friendship. To our viewers, thank you for viewing. We've averaged anywhere to around 2,500 to 3,000 viewers per event. We thank you for your support. Whether you be a brother of the fraternity or simply a guest, it is certainly appreciated. We want you all to have a great night. Thank you.